Markets head into Thursday with attention firmly on Friday's U.S. jobs report, which is shaping up as the next major catalyst after a week of softer U.S. economic data, easing geopolitical tensions, and continued debate over how restrictive the Federal Reserve will ultimately need to be. The macro backdrop shifted further in favor of risk assets on Wednesday after ADP private payrolls disappointed expectations and the ISM Services survey came in slightly softer than forecast, reinforcing the view that the U.S. economy is slowing gradually rather than rolling over. Treasury yields edged lower as investors continue to reassess the outlook for Fed policy, although policymakers remain cautious about declaring victory on inflation. In FX, the dollar remained under broad pressure as the softer U.S. data narrowed yield support for the currency. The euro and pound extended recent gains, while the Australian and New Zealand dollars benefited from improving global risk appetite. The Canadian dollar outperformed thanks to strength in precious metals, while the yen continued to trade cautiously after last week's coordinated intervention, with traders still looking for evidence that improving domestic fundamentals can reinforce official efforts to stabilize the currency. U.S. equities delivered a more mixed performance despite the constructive macro backdrop. The S&P 500 and Nasdaq eased modestly as investors locked in profits across parts of the technology sector following AI-related corporate developments. Nvidia continued to outperform, but the broader market remained reluctant to add significant exposure ahead of Friday's employment report. Commodity markets told a different story. Gold surged, driven by continued central bank demand, a softer dollar, and declining real yields, while crude oil slipped as optimism surrounding diplomatic efforts in the Middle East reduced concerns over potential supply disruptions and encouraged traders to unwind part of the geopolitical risk premium. Away from the economic data, trade policy also returned to the spotlight after reports that the Trump administration has refunded roughly $100 billion of tariffs previously struck down by the Supreme Court, even as new tariffs continue to be introduced under alternative legal authorities, underscoring that trade remains an ongoing source of uncertainty for global markets. Looking ahead, today's focus turns to U.S. weekly jobless claims and challenger layoffs before Friday's non-farm payrolls report, which is expected to provide the clearest signal yet on the health of the U.S. labor market and could set the tone for currencies, bonds, and global equities into the end of the week. That's all for now.